XRP breakout loading, crypto ignoring Iran conflict. XRP is the railcars. Greed is here. Welcome to XRP Pro Ledger. And today we are sitting at one of those moments where everything that has been building quietly beneath the surface of this market is starting to break through in ways that even the most patient holders have been waiting months to see. XRP is sitting right here at $1.43 on the one-day chart, locked between $1.40 on the support side and $1.50 on the resistance side. And I know that range feels frustrating when you have been watching this asset build its fundamental case day after day. But here is what I need you to understand before we go any further. The most important thing happening in the crypto market right now is not the price. It is the fact that the market has stopped caring about Iran. Ships are getting hit in the Strait of Hormuz. The ceasefire got extended. Negotiations that were supposed to start on Friday are not starting. And crypto did not even flinch. That is a regime change in market behavior, and it is the signal that the breakout we have all been waiting for is loading right now. Let us talk about what it actually means that the crypto market is decoupling from the Iran conflict narrative, because this is more significant than most people are giving it credit for. For the last several months, anytime there was a headline about conflict, about the Strait of Hormuz, about ceasefire extensions or failed negotiations, Bitcoin would drop, XRP would drop, and the entire market would go red within hours. That was the pattern, that was the reflex, and that reflex just stopped. Iran attacked ships this morning. Trump extended the ceasefire deadline. Iran said they have no plans to negotiate on Friday. Every single one of those headlines would have crashed this market 2 months ago. Instead, XRP barely moved a penny and Bitcoin is sitting above $78,000. When the market stops reacting to the headlines that were previously crashing it, it is telling you something very specific. The fear has been fully priced in, the sellers who were going to sell on fear have already sold, and the buyers who are left in this market are holding with conviction that no geopolitical headline is going to shake. Look at the fear and greed index because it is back in greed territory, and I want to be very clear about what greed at this stage of the cycle actually means. This is not the irrational, euphoric greed of a market that has already made 500% gains and is running on retail FOMO. This is the early greed of a market that is starting to recognize that uncertainty is ending, that the geopolitical fear that was suppressing prices is fading, and that the fundamental case for crypto, and specifically for XRP, has never been stronger than it is right now. When the fear and greed index moves from fear to greed while prices are still relatively suppressed and institutional demand is still building through the ETF channel, that is the setup that precedes the kind of sustained move that catches retail off guard. The people watching the fear and greed index as a sell signal right now are misreading the stage of the cycle we are in. We are not at the top of greed, we are at the beginning of it. The XRP ETF volume data is the piece of this story that I want everyone to focus on because it is telling the most important truth in this entire market right now. The ETF tracker is showing $10.34 million in volume today, and here is what makes that number extraordinary. The price of XRP literally did not move. It jumped a penny and came back, jumped another penny and came back. The price went nowhere, but $10.34 million in ETF volume showed up anyway. Do you understand what that means? The institutions buying XRP through the ETF channel are not buying because the price is going up and they have FOMO. They are buying because they have a mandate, a thesis, and a target allocation, and they are executing that allocation at every price level available to them. They want exposure to this asset at as cheap a price as they can possibly get, and they are getting it right now while retail is either distracted by Iran headlines or frustrated by the sideways price action. The demand is not going away. It is building every single day in the background while the chart looks boring. Here is something I want to address directly because it comes up constantly and it deserves an honest answer. Does the SEC lawsuit still have a shadow over XRP even after the resolution? The truth is yes, there are still lingering side effects. XRP has not fully recovered from the years of regulatory suppression that prevented institutional adoption, kept it off major exchange product lists, and created compliance uncertainty that pushed sophisticated allocators to Bitcoin and Ethereum instead. If XRP had been trading freely and cleanly throughout the entire bull market cycle without the SEC cloud, the fundamental case for it as a payment rail and settlement infrastructure would have had years to build institutional recognition at full speed. We would likely be looking at a number 2 market cap position right now. But here is the other truth that suppression is ending, the legal clarity is established. The institutional product infrastructure is built, the ETF is live, the rails are being laid at commercial scale. The price is not reflecting the reality of where XRP's adoption actually is right now, and that gap between price and reality is exactly what makes the current level interesting. Now, I want to talk about what Treasury Secretary Scott Bessent said recently, because his words were so specific and so significant that they need to be taken apart carefully. He was asked directly about why it is important for Congress to pass digital asset legislation, and his answer covered dollar reserve currency primacy, anti-money laundering frameworks, KYC compliance, and global best practices in financial regulation. All of that is important, but the specific phrase he used that I want you to lock in on is this one: payment rail. He called digital assets a very important payment rail, not a store of value, not a speculative asset, a payment rail. And in the entire crypto ecosystem, there is exactly one cryptocurrency that has spent years building the technical infrastructure, the regulatory relationships, the money transmitter licenses, and the institutional partnerships required to function as a global payment rail at institutional scale. Ripple built the rails, XRP runs on them, and the Treasury Secretary of the United States just described the future of digital assets using the exact language that defines what XRP already is. The CoinDesk analysis of Ripple's recent acquisition strategy is the business intelligence layer that confirms everything the Treasury Secretary just described from the policy perspective. Ripple is not building a stablecoin. Ripple is building a full financial stack: custody, treasury, prime brokerage, payments, and infrastructure, all under one roof. Hidden Road clears $3 trillion annually. Standard custody brings institutional-grade asset management. The combination of RLUSD as the dollar layer, XRP as the settlement layer, and Ripple's acquired infrastructure as the institutional access layer creates an end-to-end financial stack that competes with the entire correspondent banking system rather than just one component of it. The banks that currently charge enormous fees for slow, multi-step international payments through Swift's messaging-only system are looking at a competitor that offers faster settlement, fewer intermediaries, lower fees, and a fully regulated infrastructure stack that meets every compliance requirement they need. This is not a technology upgrade story. This is a market displacement story, and Ripple is assembling the pieces of the displacement infrastructure right now, while the price of XRP is still sitting between $1.40 and $1.50. The Bitcoin dominance question is the macro indicator that I am watching most closely right now, because it is the traffic light that tells you when alt season is actually arriving versus when it is just being predicted. Right now, Bitcoin dominance is rising alongside the Bitcoin price, meaning that as Bitcoin goes up, it is pulling a larger percentage of total crypto market cap to itself rather than distributing gains to altcoins. That is not alt season. That is Bitcoin season. The trigger for alt season, the condition that has historically preceded the most explosive periods for XRP and other altcoins, is Bitcoin dominance falling while the Bitcoin price is rising or holding stable. When that divergence appears, it means that new money entering the market is choosing altcoins over Bitcoin, and the capital rotation from Bitcoin into the broader altcoin market begins. We are not there yet, but we are watching for it daily, and when that signal fires, XRP sitting at the number 3 market cap with legal clarity, institutional ETF infrastructure, a full Ripple financial stack, and a ceasefire-proof market will be positioned to capture an outsized share of the rotation. The tokenization narrative as the big game changer of 2026 deserves a direct and specific analysis rather than just a general endorsement, because tokenization is not a vague trend. It is a specific technical and regulatory shift that creates demand for exactly the kind of infrastructure that the XRP ledger has been building for over a decade. When traditional financial assets, government bonds, real estate, equities, commodities are tokenized and placed on blockchain rails for settlement, they need a ledger that can handle institutional scale transaction volumes with instant finality, regulatory compliance, and zero protocol level exploits. The Kyobo Life Insurance government bond tokenization in South Korea is the proof of concept. The DTCC's $90 trillion tokenization initiative moving to production is the scale indicator. And the XRP ledger, with its 13-year exploit-free track record, its native lending protocol upgrades and active validator voting, and its post-quantum cryptographic roadmap targeting 2028, is the infrastructure that the institutions evaluating tokenization deployments are choosing when they do their technical due diligence. Tokenization starting in 2026 means institutional demand for XRPL infrastructure starting in 2026, and the price of XRP at $1.43 is the entry point that the smart money is still able to access before that demand reflects in the price. The message I want to leave you with today is a simple one built on everything we have covered. because sometimes the most important thing you can do in a market like this is resist the temptation to make it more complicated than it actually is. XRP is between $1.40 and $1.50. The market has stopped reacting to Iran. The fear and greed index is back in greed. ETF volume is showing up even on flat price days. The Treasury Secretary described digital assets as a payment rail. Ripple is building the full financial stack. Tokenization is starting this year. The number 3 market cap ranking is secured. Legal clarity is established, and the institutions are buying every single day at prices retail investors can still access. The breakout is not a question of whether, it is a question of when. And when it comes, the people who stayed patient through the sideways action, who held through the Iran headlines, who watched the ETF volume build quietly day after day, are the ones who are going to be in a position to benefit from the full move. Stay patient, stay positive, and let us get ahead of this together. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.